Hello and welcome to Lot 49 TV. Today I will be covering a Bloomberg article talking about Israel's subtle de-dollarization of its currency reserves. And I will then tie that into a long finance article about de-dollarization elsewhere in the world. So let's get stuck in. This first article is by Daniel Avis. It was written in April this year. Israel's central bank has made the largest changes in its allocation of reserves in over a decade, adding the Chinese yuan alongside three other currencies to a stockpile that last year exceeded $200 billion. Starting this year, the currency mix will expand from the trio of the US dollar, euro and British pound to include the Canadian and Australian dollars, as well as the yen and the yuan, which is also known as the renminbi. The additions mark a change in the Bank of Israel's whole investment guidelines and philosophy. Deputy Andrews. Here we see how it's changed over the last couple of years. The US dollar is still quite high in their reserves, still over 60%. It's mainly a reduction in the euro, we can see, from like 30.1% there to 20% here. The pound's doing quite well, from 2.5 to 5%. But yes, there is the addition of these new currencies. A program of currency interventions begun more than a decade ago by then-Governor Stanley Fischer to stem the surging shekel helped the central bank amass reserves that now surpass a third of gross domestic product. They stood at over $206 billion at the end of March. Israel's shift in the allocations of its holdings brings it closer in line with the rest of the world, although it is yet to invest in another global reserve currency, the Swiss franc. China has pushed for a bigger international role in its currency, though the yuan's prospects are held back by its limited convertibility and tight management by authorities. Still, recent reports that Saudi Arabia is in talk with Beijing to price some oil sales in the yuan have only added to speculation the currency will expand its global use in commodity trades, as it benefits from accelerated de-dollarization in the wake of the Russia-Ukraine war. Latin American countries have invested close to $30 billion in yuan assets over the past 5 years, according to Goldman Sachs Group Incorporated. In a March report, analysts at the Wall Street Bank said Israel has also made some key diversification shifts and added more than $1 billion of yuan reserves in February alone. Israel's new currency basket also reflects the transformation of the country's trade flows as it developed a booming technology industry with a global reach and discovered offshore natural gas to become self-sufficient and even export the fuel. While the US is still Israel's biggest trade partner ahead of China, according to data compiled by Bloomberg, overall volumes with the Asian economy have surged, almost doubling between 2016 and 2021. Anyway, on to the next article, which covers more of de-dollarization around the world. This article is by Bob McDowell, and it was from February this year. Following the establishment of the Bretton Woods Agreement in 1944, the US dollar has dominated global trade and financial markets since World War II. The relatively recently established euro in 1999 comes second. For many years, the dollar has been the standard currency used in the world trade, e.g. oil, gold, and most commodities are quoted in dollars. Many countries hold their reserves in dollars principally in the form of US Treasury securities. De-dollarization describes a move away from this world order to one where nations sell their US Treasuries to hold reserves in other currencies or gold. Simultaneously, they seek to use their own currencies for transactions between their most important trade partners. While the US dollar is likely to play a central role for some time to come, structural trends are starting to decrease its importance. This chart gives a broad view of the importance of the US dollar. Don't know if you can really see it well here. Nearly 2/3 of international debt markets are dominated in dollars. Nearly 3/5 of cross-border loans are dominated in dollars. 63% of international currency reserves are dominated in dollars. Trade sanctions are being used more widely as an extension of international reach to achieve ends that complement or replace military efforts. In the 21st century, trade sanctions have been used well beyond substitutes for military action. It is important to note that the process of de-dollarization has gained even greater momentum with the onset of a trade war between the United States and China. The Trump presidency used them against allied nations to protect the US's own economy, as well as bargaining chips in trade negotiations. The EU has done the same and indicated that it would take such measures to enforce the Brexit agreement. Such actions or threats of such actions spur binational agreements and trade in national currencies. This is all bilateral agreements to trade in national currencies instead of the dollar. In 2013, Australia made an agreement with China to trade in their national currencies. In the same year, during the BRICS summit, Brazil made an agreement with China to trade in Brazilian real for Chinese yuan. Since 2011, China gradually shifted to trade from trading in US dollars in favour of trading in the yuan, made agreements with Australia, Russia, Japan, Brazil and Iran to trade in national currencies. It has been reported that in the first quarter of 2020, the share of the dollar in the bilateral trade between China and Russia fell below 50% for the first time. In 2015, China launched CIPS, a payment system that offers clearing and settlement services for its participants in cross-border renminbi payments and trade as an alternative to SWIFT. Since the end of 2019, the EU established Instinex, a European special purpose vehicle, to facilitate non-US dollar and non-SWIFT transactions with Iran to avoid breaking US sanctions. In February 2019, Russian Deputy Foreign Minister Sergei Ryabkov stated that Russia would be interested in participating in Instex. Since March 2018, China started buying oil and gold-backed yuan. On 31st of March 2020, the first Iran-EU Instex transaction was concluded. It covered an import of medical equipment to combat the COVID-19 outbreak in Iran. De-dollarization through digital currency. China's current de-dollarization efforts prioritize the development of a digital currency. This initiative is intended to develop a domestic payment system that could be used globally. The initiative advances China's efforts to create alternatives to US-controlled global economic, financial, trade and technology networks. The effort complements China's expansion of its national security economic authorities, including new export controls and sanction laws. China and Russia have reduced their dollar use over the past decade, but both countries, in common with most nations, rely heavily on the dollar. China holds significant dollar reserves The renminbi is traded more or less freely in foreign exchange markets. The renminbi accounts for 3 to 4% of global forex. The limited use of the renminbi in cross-border transactions constrains China's broader de-dollarization efforts. Russia's ruble is not widely used abroad. Global energy markets, Russia's main exports, are traditionally dominated in dollars. However, over time, if de-dollarization efforts gain traction, there could be implications for the US economy, US sanctions, and US global economic leadership. Anyway, that's it for this video. Thank you for watching. I hope you found it informative. Citations and links to the sources used can be found down in the description. As with all YouTube channels, please feel free to leave a like, comment, share, and subscribe. And until next time, have a good day.